I'm gonna give a quick tax 101 snippet in the best way I can in 6 minutes. All right, so a little background about myself. I went to Rutgers University, graduated 2013, top 10% of my graduating class. I'm an IRS enrolled agent, so what that means is I'm a tax specialist. I specialize in individual taxation, business taxation, trusts, estates, even farming taxation. And I'm also currently an MBA student. I'm getting my MBA from LSU. I'm graduating this year, so a little background on my education. So these are some of the firms I worked for in my career, in my 11-year career. So I worked for Deloitte, a Big Four accounting firm, Ernst & Young, another Big Four accounting firm, SS&C, which is one of the largest private equity admins in the world. Siegfried Group is a consulting firm. This is also a mid-sized accounting firm I worked for, did real estate accounting there. TogetherWorks, I was an accounting manager there. And Prudential, I was an associate manager there. So a little background about myself and the companies I work for. And these are some of the clients that I've serviced. TD Bank, Ferrari, Bank of America, Maserati, Two Sigma is a big private equity fund, Barnes & Noble, Hilton, Marriott, and Ralph Lauren. So some of the big names. I did some small clients too, mid-sized, but these are the ones that are recognizable. All right, so I started my firm in 2017, doing tax planning, bookkeeping, accounting, tax prep. I'm based out of New Jersey, Northern New Jersey, Essex County. I currently have clients in 16 different states, and I work with individuals, married couples, LLCs, S-corps, partnerships. So I work with a variety of clientele. All right, this is my dog, Gigi. All right, so a lot of my clients, sometimes they come, they'll meet Gigi. This is Gigi when she was a baby, right? She was sleeping, and this is her now. She's a big girl. Her birthday is next month. Well, next week. She'll be 3. All right, my girl Gigi, my best friend. Okay, so what's an income tax? Okay, pretty much if you make money in this country, they want a piece of it. Okay, so you guys can read that. I'm not going to just read it verbatim, but pretty much if you make any income, W-2 income, 1099 income, you sell any stocks, anytime you make money, you have to think tax implications. Okay, so these are some taxable items. Okay, you got employment, compensation, fringe benefits. That's pretty much if you get a benefit from your job. All right, you got business income. All right, we're all business owners here. Partnership income. Some people may be a partnership. You have S-corps, royalties, unemployment benefits, capital gains. Okay, if you have jury duty, right? If you have jury duty, you ever got a check? That's taxable income. Okay, gambling. Any FanDuel people here? FanDuel? No? Taxable. Okay, and then all the losses, you only can deduct the losses up to your gains. Okay, so you can't even deduct all the losses. Okay, did you get that? Okay. Okay, no problem. And then virtual currencies. A lot of these guys, crypto guys, talking about decentralized. So pretty much, when it comes to capital assets, you always want to know what your cost basis is. And like a lot of these crypto guys are saying, you can't determine how much they pay for it. They have this decentralized stuff, right? So these crypto, they're coming after these crypto guys next. Just to let you guys know, okay? Some non-taxable income items, okay? Workers' compensation, child support payments, any scholarships, okay? Your tax federal refund is not taxable, okay? Any foster payments, okay? Capital gains, okay? What this means is if you live in your home 2 of the last 5 years and you sell it, $250,000 of the capital gains is tax-free. And now if you get married, there you go. Okay, if you're married, that's double, okay? So what that means is you have to live in the house at least 2 of the last 5 years. So you have a 3-year grace period where you don't live in it, and then you can still sell it and not have to deal with the $250,000 of the capital gains. So if you purchase your home for $500,000, you sell it for $800,000, $300,000 gain, $250,000 would be tax-free. You would be taxed on $50,000. Okay? Huh? Well, then you have to pay capital gains at either long-term or short-term, or you can do a 1031 exchange. Title people. Okay? You need to talk to Juanita. Okay? And possibly do a 1031 exchange, and you can defer your capital gains possibly forever, maybe. If that's what you should decide to do, or you can just take the money and just go to Miami. Okay? Okay. Standard deduction versus itemized. Okay? So what standard deduction means is pretty much means free money, okay? Free money. That's why they say you can hire your kids into your business up to a certain amount, because they don't have to pay taxes up until this amount. So you can write them off up until this amount, and that's why it's the $14,000, because it's the standard deduction amount. Okay, so free money. What that means is if you make $100,000, you deduct this amount, and your taxable income is essentially the 86,000, whatever that, or 85,400, right? That'll be your taxable income. So if you're married filing joint, that number is 29. If you're married filing separate, it's 14.6. If you're head of household is like single mom, or if you claim your parent, right? If you claim your parent, head of household is 21.9. Okay. If you look at the calculation, this is higher, so this means your taxable income will be lower. Okay, and this is why part of the reason why people with kids or dependents get larger refunds is part of it. Yes, it's because of the child, but part of it is because they get more free money, if that makes sense. Okay, and so now that's your standard deduction, right? You'll get that for free. So pretty much you can take the standard or take the itemized. Okay, so most people that itemize deductions are business owners. Okay, personal residents. Okay, you normally take your mortgage interest and you're taking your property taxes. Okay, so the maximum property tax you can claim is $10,000. So if your property taxes is $15,000 for the year, you can only claim 10. Okay, so if you're a single person, personal residence, your property taxes are 15 and you have mortgage interest of 8, right? You can only take the 10 plus the 8, which is 18, which is higher than this. So you'll take this itemized, and if you maybe have some charity, you can add maybe $1,000 or $2,000 worth of charity. Now you have a $20,000 itemized deduction, which is higher than this. Then you would take the itemized. But now some people, you know, their property taxes might be 6, and then the mortgage interest is only 6. So 6 and 6 is 12. If it's below that, you did no charity, then you would take this, even if you have a personal residence. It's like you have it, but it's like doesn't really do you no good because this is higher, okay? And the same thing goes for if you're married filing a joint. So if you're married filing a joint on those numbers, you're probably gonna never take the itemized because the married filing joint is so high, you know, unless you have high property taxes or whatever the case is. But the only thing is with the mortgage interest and the property taxes, if you have a rental property, you can take that on your Schedule E as a rental deduction. So if you have a rental, you can always do that, okay? Or if you do Airbnb, technically you could take it on your Schedule C if you're doing a Airbnb business or something like that. So it just depends on the person, what they're doing. It depends on where the items will go. Okay, so these are the numbers for 2024. 2025, adjusted for inflation, as you see here, is up to 15,000, 30,000 here, married filing joint, married filing separate, 15,000, head of household, 22.5. Okay. Same information, okay? Just 2025 is adjusted for inflation. That happens every year, okay? All right, so these are the itemized deductions. Like I was saying, property tax up to $10,000 and mortgage interest. Those are the normal 2 things that you would itemize. Everything else is kind of hard to get, okay? Medical expenses and dental, yes, you can do that, but that's 10% over your AGI. So essentially, let's say you make $100,000, your AGI is, you know, let's say it's the 85,000. 10% of AGI is 8,500. So anything above $8,500. I mean, a lot of people don't have that much, exactly. So a lot of people don't have that much more of expenses. So pretty much the first 8,500 is not deductible. Anything above that would be deductible. So most people don't have that much medical expenses. Okay, charity is up to 60% of your AGI. So what that means is you multiply 60% times the 85,000. In the scenario of making $100,000, and essentially that's the most you can deduct for charity, okay? Whatever that number is. I don't know, let's say it's 63, right? Okay, and then casualty and loss, but he has to be in a federal disaster area. You can't just say, oh, I had a disaster. It has to be like Houston hurricane type thing, okay? Schedule C, right? There's a lot of LLC business people here, right? So these are some common deductions for LLCs. Of course, it depends on what you did for the year. Definitely you wanna, if you're confused on what tax deductions are, you could contact me, set up a consultation, you know, we could go one-on-one. But these are some general, you know, things. Advertising, right? So all this marketing, social media stuff, editors that you guys are doing, write-offable, okay? Car and truck, I highly suggest keeping a log of all your mileage. So you're coming here, wherever you're coming from, keep a log of all your information. All right, it's definitely important to do that. And also keep track of any repairs, maintenance, anything like that if you use your car a lot, okay? Because generally speaking, you take either those car expenses or mileage, whichever is higher, okay? So you don't know which one is higher unless you keep track of both, okay? And now, employee wages, right? Contractors, okay? So some of you guys may hire contractors, people that help you out. You know, 1099s are due last Friday. Hopefully you guys sent them out last Friday, okay? And not doing them this week. It's okay. There's a lot of people doing them this week, but you know, it was due last week. So now W-2s, contractors, okay? A lot of people don't like to pay W-2 because W-2 you have to pay half of their Social Security and Medicare for them, and a lot of people don't want to do that for their people, so they just do 1099. Okay, so business insurance, loans on interest. So you're doing the write-offs of the loans, right? But are you looking at the loan statement to log the interest? Because that's deductible as well. Okay, keep that in mind. I'm going over. I'm talking too much. I'm over time. Okay. All right. Look, rental real estate. I'll show the video. Okay, I'm going to show you guys a video. Rental real estate. Okay. I didn't get to talk about this. This is very important. Can I do this real quick? It's very important stuff for these guys. Okay, so look, listen. All right, I'm gonna do this best way I can. You guys need to know this, okay? LLCs, right? LLCs, $50,000 worth of income, right? Your federal is gonna stay the same, okay? Self-employment tax. This is how much self-employment tax you're paying on $50,000, okay? NJ, you have to pay this. Yeah, tax prep. This is what goes to me, $450, right? Okay. Total $15,000 cost. However, if you switch to S corp, no payroll. You're not supposed to do that, okay? You're supposed to have payroll, but let's just say you elected S corp in December, and say, okay, I did it in December. I don't have any payroll, okay? You don't want to get audited. You won't do this too many times. If you do this too many times, the guys are like, all right, guys, you're not paying anything here. You're not paying nothing. You need to pay something. We get you on a lower rate, but you can't pay nothing, right? So this is if you have no payroll. Zero, NJ is the same, federal is the same, tax prep, yep, it goes up, but total is $8,000, right? Better scenario, okay? So now this is what you're supposed to do, okay? $50,000, okay? You pay yourself a reasonable salary of $20,000. See, it went down a little bit, but it's still something, right? And then, boom, payroll. You gotta pay payroll, you gotta pay ADP, something. But you can get this down if you pay Gusto. You get them to $40, okay? Maybe you pay $450, $500, okay? And then boom, $12,000, okay? And then now this is if you hire somebody on W-2, okay? Pretty much if you hire somebody else, you push yourself on it, you pretty much, it's lower than this, but it's not as low as this. So this is your ideal thing. This is better than this, okay? All right, I'm done. And listen, you have until March 15th of this year for it to count for this year. So what that means is, you know what your numbers were last year. You know if you're hitting this. So if you want to save some money, switch to S corp. It save you some money. Okay? All right. Call me. Yes.